So good morning, everyone, or good afternoon, wherever you might be. Thanks so much for being here. Truly appreciate it. Our topic for today is setting and adjusting stops. And I think everyone knows I'm kind of, well, Ed and I are probably on the same wavelength as far as planning trades. We're kind of hardcore planners on everything, and that's really what this comes down to, is the planning of your trade and thinking about a position for entering. So does anyone have a trade that you are looking at right now for a potential entry point? Because I always think it helps if we use an exact example that somebody's looking for. DUK. Okay. Now, obviously, we don't have much of a buy signal here yet, but I like the pattern. I like the setup in here. Obviously, we've got an upside trend. There's our support level in here, and we're really, really close to that support in the chart. So let's start off here by looking at Duke and see if we can put together something that makes sense to you. Now, when I look at the price action of a chart here, price is the most important thing to me. It is more important than indicators. It's more important than candlestick signals. It's more important than anything. Support, resistance, and trend are very, very important to me in the technical patterns of the trade. So when it comes to setting a stop on something like this, I have to respect the price action of the candlesticks. So that being said, what I would want to do is I would want my stop loss to be underneath that price action. And the reason that is because, well, we have often seen the volatility here in the market, and we may have a buy signal that shows up in here on this chart. We pop a buy signal, and then the next day it does something like this, right? And then reverses once again in that chart. And when you look at this, looks like a standard consolidation in here, right? So I want to place that stop loss underneath that price action in here, and I'm perfectly comfortable with the idea, if this were to even push back, if I bought this here today, push back down into here, if my stop is here, I have already made the decision that I'm going to hold that stop. Okay, I'm willing to accept the consequences of that pullback to here, but no further in the trade. Okay, a major mistake that I see too many people do, and they get chopped up so much. If you have a win-loss ratio that's struggling, the first place I would want to look is how you're setting your stops, how you're planning your trades. Now, one problem I run into a lot is, well, we're just not planning our trades. We're taking knee-jerk reaction trades, and there's really no thought process into it. It's, oh my gosh, I'm missing out. Hurry up and buy it. Or they put stops super tight. I have actually worked with several people in trading that their win-loss ratio was absolutely backwards. They got stopped out about 70% of the time on trades. And the reason was they were trading their stop losses way too tight. They had such a low tolerance for risk in the trade. Just a little whip in the market, they're stopped out. They're out of the trade before it barely got going. They created the loss, not the market. And believe me, I know, because I had that problem. I thought, to be conservative, let's be really conservative on these trades. But it just creates lots of stop outs in those positions. So get away from that trade. And if you struggle in knowing where that should be, it's one of the reasons I spent all the time I did bringing in the volatility stop indicator. Now, this is not the trendinator. This is the volatility stop indicator. The volatility stop indicator is bringing into the mix of price action the volatility, the moves of that, and where your stop loss should be. Okay? So it's literally giving us the clues that because of the volatility of the stock right now, the volatility of this move, our stop needs to be below that price action. Okay? So if you're struggling with that, I'd really recommend you putting on a chart, and separate chart that has that volatility stop in there. It not only helps you stay in a trade, but it helps you adjust trade stop losses correctly so you can stay with the trade. Okay? So think about that. In this chart, I've got this one a little bit tight probably, but here, let me just turn this into a full-on line here. Somewhere right in there. I'm going to use the top of this candle right here, some of that support area there, because if we come down and hit this support, the top of these, we should bounce. If it doesn't bounce, I want to be out. So I'm going to say right around 118 on that trade. You have to use, there's a code. I don't know if anybody's got a link to the code. You can go over to my YouTube channel. It's in the description of the videos. I don't have it handy right here. It was a code written by Steve Combs that was a member of RWO back a bit. He wrote the code to put the volatility stop indicator into ThinkorSwim. But I don't have the code for anybody else. Somebody's probably got that if they can drop that link in there for you. It might even be, if you look in the files section on the room, on your main room, it might be in there, so you can download that code and drop it in. It's a program code that you have to put in to put it on ThinkorSwim charts. But here's the thing, Jesse. I mean, for less than $30 a month, you get ThinkorSwim, you just turn it on. I mean TC2000, and you just turn it on. You don't have to mess around with it. It's there. It's easy, and it's very, very easy to set up. And to me, I think so much of the time we mess around. We spend so much time trying to make a free charting package work for us that we're wasting money. If you want the volatility stop, make it easy. Okay. Oh, thanks, Roasted. I appreciate it. So think about that, what you're doing in there, because sometimes I know I used to do the same thing. I would waste hours and hours and hours trying to make a free thing work the way I wanted it to do. And for $30 a month, I mean, less than $30 a month. Okay, let's talk about doing this trade. So if I were going to pick up Duke, I'm going to come over here. I haven't looked at this. I don't know what it's got for options. Let's take a peek in here. I'm going to have to use the Junes because I always go, if I'm going to do a directional call option, it's got to be 60 days plus. So the April doesn't qualify. And I won't get open interest. So I got a 69 delta here. I hate that bid-ask spread. Hate it. So I would have to negotiate that bid-ask spread, or I'd have to just decide to buy the stock. Okay? So what I'm going to do in here is I'm just going to just assume that this is good, and I'm going to put this trade on, and I'm going to not negotiate this just so I can get this filled here on the system. And then I'm going to show you the process I use to set a stop. And I know not every charting package is going to have this, or I mean every brokerage it isn't going to have what I'm going to show you here, but it's the way I do it, and it just works extremely well for me. So remember, my stop loss needs to be right around 118 in here. So I put on a trade. My trade is on. I own Duke in here on the paper account. Okay. And now I want to place that stop loss. The way I'm going to do that is with a conditional order. So I'm going to go to Duke here, right click, create a closing order. And then I'm going to go right over here to the gear icon. Right there. This is the order rules. I'm going to click on that. If this is the first time you've ever done this, it may open up on another window. So find that order rules in here. And what I'm going to be messing with is I'm going to be messing with this section right in here. This is called conditions. And a lot of people don't know this is possible. They don't do this. I don't know why. They don't learn the advanced orders that you have in here, but they're absolutely awesome. And the condition that I'm going to place in here is that if Duke, just click underneath the symbol, the mark is the center between the bid and the ask. You can use any of these that you want, but I use the mark price, center between bid and ask. And see right here, less than or equal to is at 118. Okay? Now, in order to make this an official order, it's a sell order, I'm going to make this a market order. Because the conditional order, what the conditional order does is it sits on the ThinkorSwim server here. The market makers can't see this order. Okay? What it's doing is instructing the ThinkorSwim system as soon as the stock is at 118 or less, send a market order to close this trade. Okay, so I usually get very quick exits on trades by doing this. And I always set it as good till canceled. Okay? You hit save, confirm send, and make sure you read your order. And you can see what it's going to do is it's going to sell this option. It's going to wait for this to occur. If Duke is at or below 118, close this trade immediately. Okay? Send. Simple as that. Now, the other part of this class is how do you adjust the trade? It's really easy. Now, one of the things that I do, and I know a lot of people don't like to do this, but unless the stock has hit my goal, what I want in the trade. So for example, for me, a minimum goal on this is if my entry was here and my risk to my stop is here, I want at least double of that for profit. So something up here would be my upside goal. I want at least 2 times upside, and I've got room to do that as long as it can break through that resistance right there. Because that would be blue sky up there, right? So as long as it can break that, I want it to get up into that area so that I can have a double on the trade. Otherwise, I'm not going to take the trade. I don't take trades. Oh, thank you, Milton. Milton's got the code there for you. I don't take trades that I can't get, that I don't have the potential to make double the risk. Now that doesn't mean if I'm shooting for this up here, if my goal, I've reached my $300 goal or whatever I'm trying to catch in a trade, if it's up here, then I close the trade. But if I need this to come all the way up here to truly reach my goal in the trade, that's where I'm shooting for in the chart. Okay, I want double the risk, double the potential upside for the risk that I'm taking on the trade. Okay. So if the stock does move up and I want to adjust this stop, it really is as easy as just coming over here to my working orders on the Duke order here. Okay, I'm just going to right click on it and say cancel replace order. Go to my order rules, adjust the price up, whatever that price is, just adjust the price up, save, send. That's all I have to do. And it adjusts that conditional order. So I tell people that what I do is all of my stop loss orders are adjusted and reviewed prior to the market open every single day. Before the market opens, I'm running through everything I hold, checking it against the plan that I'm trading on that trade, because I forget the plan sometimes. What was my intention on this? And I'm looking to, and then I adjust those stops, and I do it before the market opens. And one of the reasons I have to do that is because as soon as the market starts, I'm on the microphone, I'm talking, I don't have time to go check that stuff. I'm answering questions for somebody else, and I might miss it altogether. The other thing that you're going to find with me is because I do this, I don't look at the stocks that I'm holding all day long. I'll check them a couple, 3 times during the day for a swing trade. On weekly, on longer term trades, I don't check them a lot. Okay, because my orders are set. My parameters are in. My job, once I'm in a trade, is to look for the next trade. Not to sit here and watch a candle wiggling around on a chart. And it relieves the pressure because I can look at this and say, how much risk do I have in the trade? Well, you guys saw me, I did about a 69 delta, 70 delta, and where the stock is right now, it's about $1 lower. So how much am I going to lose? On a 1 contract trade, how much am I going to lose? 70 delta, $1 lower, I'm going to lose $70. Okay, thereabouts. Could be about 70 bucks on that trade. So I know that's way under my risk. If I have a $200 risk tolerance, I know I can trade 2 contracts on that trade. And it just takes me minutes in the morning to go through all of my positions, readjust my stops that need to be adjusted. A lot of them don't need to be adjusted, but that need to be adjusted, hit save, and I don't have to worry about it now. Okay. Now let's talk about the actual movement in a trade for a stop. Okay. When do I adjust those trades? my stop would stay here. Okay. For the most part, if this turns bullish and starts moving up, okay, my stop is going to stay right here until that stock either hits my goal or I start seeing that pullback that occurs in the chart, comes back, finds that support, and then sees more buyers stepping up. I haven't hit my goal yet on the trade. And when this occurs, then this stop loss moves up from here, up underneath here. Okay? And the reason that's the case, guys, we have all been guilty of this. Every single one of us has been guilty of this. We finally get a trade that's in a profit, and we move that stop loss up so tight. We're so worried about it now. We move that stop loss up so tight, we stop ourselves out with little tiny profits. How many in here would admit you've got problems with doing that? That your winners are never big winners because you stop yourself out too quick. You move the stop loss up so close and so tight, trying to protect that little tiny gain, you get stopped out on those trades. Rick likes to call it eating like a bird, pooping like an elephant. Because we've got this much risk to the stop loss, we accept that. But man, it gets a little bit of green on it and we move that stop loss up. The volatility of the chart takes us out with a little tiny profit. And we can trade over and over and over and not overcome one loss. Okay? So, why do I do it this way? Now let's think about this. If I'm bullish on this chart, it's got to have a reason that I'm bullish on the chart. I'm bullish on the chart. Why? Because of the trend. And what I say all the time is the trend until the trend breaks. Okay? How do I know this thing isn't going to go to 150? I don't know that. I'm trading this trend, and that's why we trade these plans, or we do this thought process on a trade. We're using the technical analysis in here to say this is a bullish chart. It continues to move up in these great patterns, continues to hold support, it continues to stay stable. So I'm going to continue to hold that trade until my goal has been reached on the trade. Okay, I leave that stop alone. I don't tighten it up too much. Now, it's fine with me, and I know what I just wrote there might be a little bit extreme for everybody to start this way. But say, for example, you're in this trade here, and you get that first day move, and what happens? I see a lot of people move their stop loss up right underneath here. And if that stock reverses just a little bit, like it did this morning, we went down, we took out lows, and then we reversed. And you got stopped out on this trade. That little win that you had by tightening that stop loss there turned into a small loss. Trade still went up, but you're not in it anymore. And I know I'm not the only one that's ever done that, because I see a lot of people doing that. So there's nothing here yet to be worried about in that trade if it's moved up the first day. If you get the second day move and we're stretching up, if you want to close the gap on your early stop up here, fine, but make sure you stay below that candle. Your stop loss moves up less aggressively. Stay below that candle someplace, so in case this has to turn around, this is a good level of price support, right? If the stock has to turn around and come back and test that, fine. Just bounce off of it. And isn't that how trends are made? Isn't that how the market works? The market is always going back and checking. Is this the right price? Is this the right price? Is this the right price? Are there buyers here? Are there sellers here? We're always checking in the market. But if you adjust that stop too tightly, boom, you're out of the trade. You make no money. You did all the work. You did all the work. As a matter of fact, you did a really good job of finding the chart in the trade, but you managed it to a loss trying to be ultra conservative on the trade. You didn't give the chance of the stock to move. And we have to have movement in the stock if we're going to make money. Okay? So we have to give it the opportunity to pull back and test. Okay? Does that make sense? Anybody have any questions on that? If we get too aggressive with our stop losses, we end up with lots of little wins. Little tiny wins or lots of little tiny losses. And it doesn't make money. So remember the plan. Why are you in the trade? What's the why? And I tell people this all the time. The difference between a good trader and a trader that is just winging it is they don't understand the why of the trade. Why is this a trade that I want? I like it because it's a bullish trend. We're close to a blue sky breakout. The pattern is clean and stable. So why would I want to stop myself out really quick in here by raising a stop too quickly if I've got the direction right at least that day? Does that make sense? We can eliminate a lot of these stop losses by setting them correctly. But the other part of that is, I hear this from people all the time. I don't set stop losses because volatility always takes me out. Okay, that I'm telling you, you're setting your stop losses wrong. Okay, I don't get stopped out very much because I set my stop losses based on the price action of the chart. Okay. All right, let's continue on with this. I'll get to that, Hawk. Remind me if I forget. Now, what if the stock, not only did you get this trade right, but you got it really right, and the stock gaps and moves like that the first on the day? What do you do here? Well, as a general rule, what I will do, if I get a big enough gap that my goal money is close there, I just immediately go to because this is just a swing trade, I immediately just go over and I put an order in the morning before the market opens. Close at the open. Market order, close at the open. And I'll tell you what, guys, I know a lot of people just grouse over that so much. You would be surprised how many times I get the high print of the day on my close. Because I'm not the only one thinking that. It gapped up big, there's big money in it. A lot of people come in, boom, they close it as soon as the market opens, and then guess what? It pulls back. It doesn't go bearish, but it pulls back. Right? Not all the time, but enough times to know I'm not hurting myself at all. I'm not going to sit there and try to time this by squeezing as it's wiggling around intraday. It moves too fast. I don't have time for that. So I just put an order in and close it. And oftentimes, guys, I look back, I got the high print of the day by doing that. So that's not setting or adjusting a stop loss necessarily, but it is a stop in the sense of I'm stopping myself out of this trade to take a profit. on the position. Now, if you happen to get into that really fast mover, it gapped up nice, and man, this thing looks like it's running even in the morning session. Then what I do is I will set some kind of a limit order on the trade. Okay, so my trade is in. I'm just going to go ahead and cancel that order. Whoops, I didn't cancel it. I said, there we go. So what I would do is I would right click, come over here to sell, and then I'm going to set some kind of a limit on the trade that would get me out of that trade. So you can do a limit, you could do a stop limit or something like that. But what I'll do is I will have it automatically adjust. Okay, trailing stop. And maybe I set that trail, hey, it's an option trade, so I might set that trail 50 cents. It can pull back, but it can only pull back 50 cents. And then I'm out. Okay? And that way, I put that order in, I don't have to watch it. Because as long as that stock is continuing to climb, it's automatically adjusting the stop loss up. I know I want to be out because I've got a great profit in the trade. I'm just trying to trail it up and catch the last little bit that might be there as they zoom first thing in the morning, when they often get those zoomies. And so I just set that automatic trail. I don't even have to watch it at that point. My decision's made. I want to be out of the trade. I'm just trying to squeeze a little bit more out of it in profit. So I set an automatic stop. I usually do it before the market opens or just as the market opens, and then I don't look at it. When it stops me out, I'm stopped out, and I don't care. I locked in my profit. That's all I'm trying to do. Okay? Because the last thing I want to do is waste my day by watching this candle wiggle up and down. Because my job is to go find the next trade. This one is over. Go find the next trade. Okay, makes sense? Everybody understand that? So using the trail stop is a great way on that speedy moving stock. It's zooming to the upside in those trades. Okay. Now, another thing to think about is you can use a stop order to take a profit. Okay, I know that's not what most people are thinking about when putting on a trade, but a stop order to take a profit. So for example, if I got into this trade here, and I'm looking at this upside trend, I might have an order up here. I call it front running to take the profit off of that trade up in here before it reaches this next resistance. Because show of hands, how many of you guys have had this happen to you? You get into a trade, the trade is working out, the numbers are coming in, everything is great. You're waiting for it to pull back. You're waiting for that black candle. You're waiting for that signal to get out of the trade. But when the black candle comes in and you finally stop out, you're settling for less money than you had when it was going up. Right? Everybody agree? You can have a good profit, one black candle, and it's half the profit. Half the profit's gone. Right? So why not set something up here? And it's one of the reasons my win-loss ratio in futures trading is so high, is because whenever I take a trade, and there's no time in futures trading that I don't look there and say the next resistance is up there and I am selling it before it gets there. I front run that resistance point where that pullback is. I get the up candle price in the trade. Trade closes. If it's going to pull back from there, who cares? I don't care. And honestly, I don't care if it keeps going up. I did my job. I made money. So if I were in a trade like this, I can also set an order up here to close the trade at a profit. Now, if I was in this trade, my stop is down here, my entry is in here, I've got a doubler here already to the next resistance level. So let's say in this trade here, there was a resistance up here around 120, 123, yeah, let's call it 124. That's a little bit high, but 124 is my next resistance level in the chart. Okay? So what I'm going to do is I'm going to pull this back down, call it 123.5 or something like that. I want to front run that next resistance. And I'm going to do this. I'm going to go over to my ThinkorSwim. My stop loss is 118, right? My profit target is 123.59. All right? I'm going to take my trade in here, closing order, and then I'm going to change this to an OCO, order cancels order. Right click and duplicate this trade. So now I have two closing orders here in this position. I'm going to go to the first one here and I'm going to sell at market, good till canceled. This is my stop loss, Duke, method, mark, less than equal to 118. Okay, I'm going to save that. I'm going to come over here. I'm going to do the same thing on this other order. Whoops. But this time, it's a market, good till canceled, mark, but it's greater than or equal to 123.50. Save. So what I've done here with two conditional orders, one cancels the other. If the stop loss order gets triggered, the other one gets canceled automatically. If the profit target order gets triggered, it cancels the stop loss automatically. I don't have to think about it. I don't have to worry about it. My parameters are in the trade, and you can see if we look at this, order description, we're going to close Duke option here if Duke is at or below 118. And we're going to close the same option if Duke is at or above. Whoa, did I put 00 in there? What did I do? Good thing to always read those. I did. 123.50. There, okay. So always a good idea to read those, especially when you're talking and trying to teach. So it's going to sell the same option on this. If this is triggered, the stop loss order automatically gets canceled. If the stop loss order gets triggered, this automatically gets canceled. Okay, and once those orders are in, guys, I can always adjust the stop. The stop loss, I can adjust it if I need to adjust it up. I can adjust it up, leave the order there, just adjust the price. If I choose to adjust the profit target down or even up a little bit, just leave the order there and just adjust the price. And now this trade is completely set. Okay? Both of those orders are in place for a profit target. They're chained together here. One cancels the other. And I've got stop orders for a profit and stop order for a loss. to close those trades, to put that money in my account. Now, if you can't watch the market, guys, I can understand why you're watching, you're sitting here, you're watching the market, you don't want to mess with that, with the profit target side of things. But you're going to want to know this. When you've got to go to the dentist appointment and that trade is working out, you're not going to be there. Set that order like that. You can take profits while you're sitting in the dentist chair going, and getting drilled. Okay? You can take profits. You can protect trades when you're not there. Okay? Now, I utilize these a lot because what am I doing during the day? I'm talking. I'm not looking at my stock shares all that much. I'm not stuff that I'm holding. So I just do this all the time. I bracket in those trades. Then I don't have to be here or watch. And even if I'm going to be gone, a lot of times what I say in credit spread trades and ratio spread trades, a close above a specific area or below a specific area, that's only why I'm here. While I'm here, if I'm in a trade, here my IWM spread trade, okay, this blue is my stop right now. And if this follows through here today, I'll probably move that up underneath here someplace. But for now, it stays down here. And I usually say if I'm closing below this, I close the trade. So if it looks like I'm going to be below this at the close of the day, I just close the trade. Then if it looks like, because I've done this many times, and you guys in RWO see me do this many times, where a stock, because I set my orders based on support and resistance levels in the chart, it'll run up, it'll even go through my resistance, and then by the end of the day it's back below, and that turns out to be the high, and it pulls back from there. You guys have seen me do that multiple times because I'm working with the price action of the chart, respecting the price action of the chart. So if I'm here, I can watch that occur and still be okay holding it if it goes beyond my stop on those spread trades, because the spread trades have that cushion in them, and it's a lower risk trade. But if I have to leave, the hard order goes in to close that trade because it's broken the rules of my plan. Does that make sense? Everybody getting what I'm talking about here? Any questions on any of this? Awesome. Because by doing this, guys, I have made myself a pretty profitable trader, and I don't anguish about my orders or stops, and I don't sit here and watch a candle wiggle around during the day. Okay. Futures trade, pretty simple. I go to a paper trade. Whoops, not there. Here. Go to a paper trade chart. I'm going to do the exact same thing on trades. If I take this short right here, there's a nice little trap short setting up. My entry into the trade in here, I will have an order to close this trade before it hits that support. Before it hits that support. I do the same thing over and over and over. Okay? And I know a lot of you will look at that and say, yeah, but how do you know it won't fall further? And it could. But see, my job is to make money, and I just made money. What happens after that, I don't care. I'm going to wait for the next trade and do it again. And last year I made over $150,000 doing that. So it's just an order. It's an order to say, close it. There'll be an order up here to close it for a stop. But just an order to close it for a profit. Same way. And it is the exact same thing on longer term trades. What Hawk was talking about. Let's take a look at my AT&T that I'm holding longer term in here. Okay, I'm going to manage this trade exactly the same way, but I don't have a specific upside goal. Meaning, like in a swing trade, that's intended to be a quick trade, right? In and out kind of trade. But the position trade is meant to give me a lot more time in the trade. And it doesn't mean I don't sometimes sell and take some profits on the trade if I think it's going to pull back after a big stretch to the upside, and then I'm going to wait for the next entry into the trade. But initial trade in here, entry into this trade was in this area here. Okay. I wait for that stock to move, prove it wants to hold, the stop stays here. Prove it's going to hold and follow through, and then the stop moves up. It moves up and holds, follows through, then the stop moves up. Okay, because all I'm doing is letting price action do what it needs to do. Price always moves up and down. We're trying to find support, right? We're trying to find trend. We're trying to find all these different things. Now, one thing you're going to find with me is the more profit I have in the trade, I'm going to relax my stop. I give it more room to pull back. Because my intention is to hold this trade for a longer term. I've got a big profit in the trade. So now I'm waiting, giving it time to do what it needs to do, and I'm usually using covered calls and things like that to hedge the position. Okay, so I'm easing the pullback by the use of the covered calls. But it really is the same kind of a thing. Longer term trades, I am always using every method I can in covered call trading, things like that, to hedge the pullback. So I can make money as it pulls back and reduce the loss of the pullback so I can hold the trade longer. Okay. Initially, if I'm going to get into the trade, you're going to find that most of my trades are going to respect the volatility stop. I don't actually have to go check it because the price is telling me. Remember, the volatility stop is calculated off the price. If you're respecting the price action of the trade, that tail right there, your stop loss is below that tail. Okay? The volatility stop is there to help people see those places and helps them, come to grips with where their stop should need to be. Okay? But like I say, as it goes up, when I get more and more and more in profit, then I relax my stop. I'm up like 500% on this trade. Okay? I don't sacrifice making money doing this. And I think a lot of people think, well, I'm sacrificing making, every single penny. I'm not sacrificing anything because I'm up so big on the trade. I've got plenty of cushion here to now work that trade. Who knows where this is going to go? Could this go up for years? Yeah. So let it do its thing. I don't know what the future is going to bring. You don't know what the future is going to bring. All I can do is manage the chart. So I let the price action lead me, and I manage the chart from the price action. Okay? Does that make sense? I did when I showed the 118 there. Yes, you're right. When I showed the 118 there, I did that to make that really easy to understand. The stop in here would be around 117 and a half, somewhere in there if you use the volatility stop. I set it at 118 because it was just $1 and it was an easy thing to show. Okay, so you can understand the purpose of doing that. So this is where I had that stop, and it is above this. I am still respecting the price action of that chart, though. Okay, does that make sense? It was for explanation purposes. Okay. One of the reasons I became a trader, and I gave this up when I decided to teach, but one of the reasons I became a trader is I wanted freedom. Okay? There is no freedom, guys, in not planning your trades or setting stops. Because then you have to sit here and stare at a chart all day long. There's no freedom in that. And if you're honest with yourself, how many of you have more than 7 trades on at any one time, particularly swing? How many of you have more than 7 trades on at any one time? Probably not, right? It's probably closer to 3 to 5. Now let's think about that. You've got 3 to 5 trades on and your whole day is consumed by watching those candles wiggle up and down. How productive is that? Wouldn't you be better off learning a new trading skill, learning a new strategy? Set your orders. Now you're free to study, to take the wife out for lunch, to go play with the dog, to go for a walk. If you're not intending to buy any more trades because that's the maximum risk that you can handle, then why are you sitting there watching it wiggle around? Because there is absolutely nothing that we can do to influence the outcome of that trade. At that point in time, when you're in the position, it's up to the market. Whether that trade is going to work out or not. And us incessantly staring at it. It's fine for, I don't have a problem with you set the orders and, hey, I got to check this every hour or something like that. You can still do other things. You don't have to watch it wiggle around. It's unproductive. And what I find in a lot of folks, how many of you would agree it just raises the emotion when you do that? Oh, it's up 350, 350. Oh, 350. I want 350. And then it drops to 340. Nope. I want it 350. It's got to get back up. Come on, get back up to 3. Come on, get back. I'll take it. I'll take it if it gets up to 350. and it just drives that emotion around. So set your orders. Use those stop losses to your advantage to ease that pressure, remove that emotion from your trading, and remember the why of the trade. The trade is a bullish chart. It's a good setup. The buyers are stepping in. There's no way that I know that this trend could fail on the next candle. It could fail 2 years from now. I don't know that. You don't know that. Nobody does. So understand the why of your trade and commit to the why of the trade. Set your orders. Go find another trade. Be more productive. Okay, so I hope this made some sense to you, and this will help you with your trading. It's something you should practice. I got to tell you, the conditional orders, a game changer for me when I learned how to use those, and I use them all the time, because once those orders are set, I don't even have to really worry too much about calculating the exact penny on the option price. I use the price action of the chart, which is the correct thing to do anyway. Set the stop. If I calculate between my entry and my exit and it's more than I can risk, it's not my trade. Go find another trade. Somebody's trade. It's not my trade. And just keep doing the job. So, hope that was helpful. I want to wish you guys a great afternoon. I need to hurry up and get out of here because I'm going to cut into John's time here, so I'm going to call this a day. Anytime that you guys have questions about that, feel free to ask me. I'd be glad to help. Y'all take care. Have a great afternoon. Here comes John.